Good morning, good afternoon, good evening, whenever you are watching. I hope you're having a great day. And as always, a free way you can support this channel is by hitting that like button. Subscribe if you haven't. Leave a comment. I saw some of you comment letting me know what you had for breakfast, lunch, or dinner. I really appreciate that. That does help with the algorithm. I got a bunch of new patrons yesterday, so thank you all so much who signed up for my Patreon account. The stuff that I share there is very valuable. You get exclusive access to my portfolio, to moves that I'm making, and just check it out. You could get in for as low as $3 a month. But without further ado, let's go ahead and dive right on into this. So here's some perspective for you. We are at prices not seen since last week. So just keep that in mind. We got reset back a week ago. I pretty much called the bottom, at least on Twitter. I said when it got under 54, got to 53 something yesterday, that we're going to bounce hard off of this. I'm not the most encouraged by the bounce right now, but that's all short term. It's all just what's going to happen from here. Yeah, I could see us going a little bit further down, not all that much down. I think that 53 at this point, the last I saw, there was a ton of orders set for 53, that if we got back to 53, that we would have kind of a double bottom, which would bounce us higher. I am not at all concerned. I think that it's really important for me to communicate that to you. And here's something that I really need to stress to you guys. You have to do your own research. I am unshakable right now. That a dip from, got as high as 58 something yesterday, went down to the 53s and went down very quickly, and I lost something like $40,000 in a span of an hour. That for me, it was just really just a blip. I brushed my shoulders off. I just went with my day, and I know that we're going to see higher prices, and when that time comes, the market will decide, but that time is coming. We are, all right, let's just say for the next 3 months that the peak was $64,000 right before Coinbase was listed. Then what does that mean? That means that there's going to be no crash. Trust me on that. That just means that the money has gotten too smart and we're in a different atmosphere. But even if that's the case, I would still expect the price of Bitcoin, instead of shooting up, going crazy at different times, to just trickle higher as we establish new, higher and higher floors. There's no reason to be concerned right now. I mean, last Monday, 8 days ago, I made a video celebrating the fact that Ethereum crossed $3,000. Okay, all right, think about that for a second. I made a video celebrating the fact that Ethereum crossed $3,000. That was 8 days ago. For Ethereum to be at $3,900 right now, if you told me 8 days ago that Ethereum would be at $3,900, I would be dancing, prancing, weeping for joy. Maybe not weeping, but you get the picture. It's just, I understand once we get to those highs. Ethereum got a little over $4,200 yesterday. Now it's at $3,900. It's like you think $4,200, that's like the new benchmark in your mind. It's like, oh man, now we're at $3,900. What an awful dip. No, this is nothing. It's nothing. Binance is just fine. All these other cryptos are just fine. There was a stock market sell-off, which there is still, unfortunately, some correlation between stocks and cryptos. It's a thing. Something that we really haven't experienced in the entire existence of cryptocurrency is like a major stock market crash ever. I mean, I know that the coronavirus crash was a thing, but that was such a flash in a pan, and everything bounced really quickly after that. And so I don't count that. But look what happened with Bitcoin at that time. I mean, it went down to the 3,000 range from, what was it, 8 or 10,000, something like that. So again, all that to say, There are some other factors that could come into play sometime. I wouldn't be surprised if a stock market crash just annihilated all of our fundamentals. Personally, I don't think we're going to see a stock market crash anytime soon. And I am a super bear when it comes to, well, not a super bear. I'm a bear when it comes to the U.S. economy. All of this funny money that we're printing, all the stuff that we're doing, I'm just not a fan. There's some things I'm going to talk about later in the video about inflation that just have me very, very concerned right now. But I'll get to that at the end. For now, here's what I want to talk about. Just really two things, because again, you've got to do your own research. I have such a solid foundation in this. I am never selling my Bitcoin. And I am maybe at the end of this bull run selling my Ethereum. If for some reason we're at a peak, I'm not selling a single ETH, not one. But we're not at a peak. We're nowhere near a peak. The fundamentals are so solid, okay? So let's talk about what happened yesterday. What happened yesterday? People asking me all over the place, man, what just happened? You know what? Usually there's an answer for that. I actually tried to find an answer, and I didn't see anything. And that's fine. It's just, what that means is that their normal movement, maybe somebody with deep pockets sold some of their crypto, and that tends to happen every now and then. Okay, you will regret that, whoever you are. And so that person with deep pockets sold, and then a bunch of newer wallets sold. And so here's one thing. Okay. Most Bitcoin that were sold yesterday were young. Dormancy and average age of crypto sold both went down, while there was a big spike in selling from 1 day to 1 week old coins. So 68.5% of coins sold yesterday were a week old. I mean, that's what happens. That's what happens when you are new into the space and you haven't done your research and you put your money into something, and then when some kind of dip or crash happens, your hands are weak. You've got those paper hands. You know what I'm talking about with that, and of course you're going to sell. So the fact that 68.5% of coins sold yesterday were under a week old, that's zero surprise to me. Not surprising at all. Goodbye, paper hands. Don't come back. Let the institutions just keep buying up your cheap Bitcoin that you sold at a loss. And it's driving me crazy, man. The uneducated, the lack of education, you guys, so many of you, and I'm not entirely innocent of this. It's just I tend to spend less time researching a crypto before I invest in it now. During the bear market, which I am, every day that passes, I am more and more excited for the bear market to come. I am going to do a lot more research on anywhere where I put my money in the crypto sphere. So just if you don't do your research, here's my point. If you don't do your research, there's going to be a cost, and that cost, that it's a huge risk. Not in the sense that you're throwing your money at something that's worthless. I mean, if you buy Bitcoin and Ethereum right now, you're buying something that has high value and even higher potential value, and that's a good thing. But what happens is if there's a move that you're not excited about, you're going to be the first to sell because you're going to be the first to question yourself. No questions. There's no questions in my mind about Bitcoin, about Ethereum. There's plenty of questions in my mind about other altcoins, especially the lower cap that you go, the more that I will have a tendency to be a paper-handed wimp. So just keep those things in mind. That's why I encourage people to stick with Bitcoin and Ethereum for the most part, and Binance, and then spread out small amounts to other cryptos because I know my heart. I know that I have a tendency to not be afraid of my Bitcoin or my Ethereum, but to get very nervous about these other coins that I'm invested in. All right, one more thing. Well, no, two more things. Stock to flow. Guys, pay attention to stock to flow. I made a video several months ago about explaining the stock to flow model. I am a firm believer in stock to flow. And I'm not going to take the time to explain it. Please, if you don't know what stock to flow is, watch that video I made. I think it's like 10 minutes long. Look for it on my channel and do, a little control F on my videos. Watch that video, stock to flow, because this is one of the most convincing things to me when I say that Bitcoin is going to hit $1 million 5 years from now and $2.5 million 8 years from now, maybe even higher than that. I'm talking about stock to flow, and I compare Bitcoin's superior stock to flow to gold stock to flow, which is okay, and silver's stock to flow, which is very, very inferior to both gold and Bitcoin. It's just valuable information. And so here we go. According to the stock to flow model, here's where we should be. 56,635. And here's where we were at the publishing of this tweet, $55,902. Guys, we are just fine. The stock to flow model projects that we'll hit about $100,000 this year. Now, what happens, that's kind of the leveling off point. And so when I say $200,000, what I'm saying is that, the stock to flow model in 2017 predicted about a $5,000 leveling off point. But what happened is that it shot up to $20,000 and then went down to $3,000 and then just kind of leveled off around $5,000, $6,000 over those over the bear market. And so I expect something similar this time around, shooting up to $200,000, getting back below, maybe not too much below $100,000, because there's actually a second stock to flow model that predicts a $288,000 Bitcoin this year. So I think that this time is different in the sense that a lot the money printing, the M2 money supply has just increased so rapidly that with inflation in mind, that we are going to see higher than a higher leveling off point than $100,000. There's very little doubt in my mind. So, last thing I want to share. I went to Walmart yesterday for the first time in months, and I was blown away. I was absolutely blown away. For my business that I am, it's 95% automated. A part of that business, believe it or not, is going to Walmart and checking prices on things. And I could not believe my eyes. The prices on these things that I've looked at over years were for some of them they were the same. But then, what a lot of these companies do is they'll slyly, if that's a word, decrease their if something was 20 ounces, they'll decrease it to like 17 and a half ounces, something like that. But there's just some things that just flat out were at higher prices. There's this one item that was at $6.99 for the last like 3 or 4 years. And I went there and it was $8.40. And that's just one example. There were plenty of items that I was like, wow, oh my goodness, this is so much more expensive than when I came in and saw the price of this item 3 months ago. That communicates something to me that, I don't know about hyperinflation. It's kind of one of these things where it's like every country is rapidly debasing the value of their currency. And so everyone's still at the same level. And so you might not see the US dollar index crash or anything like that, but you are seeing the price of goods increasing. I'm sure you're seeing that. I mean, gasoline, which that may be attributed to other things like Biden shutting down the Keystone pipeline. Lumber is really high. There's some external factors with that as well, but there's copper. Copper has gone through the roof. There's so many things. And so here's what the Federal Reserve is trying to claim. And I hate the Federal Reserve with the heat of 1,000 suns. I don't believe a word that they say, but they're trying to claim that this inflation, they're acknowledging there's inflation, and they're saying that it's, quote, transitory. And so I like to go to zerohedge.com. Not too much. Don't bathe yourself in zerohedge.com. They've been so bearish for like the last 10 years, and look at, the Dow. First time I checked zerohedge.com, the Dow Jones Industrial Average was hovering around $10,000. Now it's at $34,000. And back when it was at $10,000, they were talking about this epic crash that will not match any other crash, and they're still on that stuff. And so, they're so bearish that they literally think the world is coming to an end, and it's not. We will move on, whatever that looks like. But anyway, ZeroHedge.com, I like to go for them for a little bit of pessimism injected in my veins, and so this is not transitory. Hyperinflation fears are soaring across America. There is concern. You ask the average American, there is concern. You can see it in the things that they say and the things that they're seeing. There is concern, and I wouldn't be surprised if this was the case in other countries as well. I just know about the country that I live in a lot more, so bear with me for those of you who live in other countries. But this is not normal. Lumber is up big. Commodities are up big. There was one thing. So, all right, let me highlight this part. It's not just finance pros who are calling the Fed's bluff. According to the New York Fed survey of consumer expectations, median 1-year and 3-year inflation expectations by ordinary Americans jumped to a multi-year high of 3.4% and 3.1% respectively, the highest since September of 2013. I'm surprised that it was higher in September of 2013. Just the average American thinks that inflation is going to go much higher. And then here's another one. Digging through the details reveals an even more alarming picture. Over the next year, consumers anticipate gasoline prices jumping 9.18%, food prices gaining 5.79%, medical costs surging 9.13%, college education 5.93%, and rent 9.49%. And are those projections, how accurate are those projections? I would say that those are quite accurate. That this fear is the reason why there's fear. All right, the average American is not smart about money. They don't understand, and I'm sorry if this is offensive to anyone. Maybe you're not the average American if you're an American watching this, but the average American does not equate the increasing of the money supply with the increasing of the costs of goods, okay? And so what this is based on, what their projections, the average American's projections is based on, is just their general observations of prices increasing. Prices have increased. I was very surprised when I went to Walmart yesterday and saw with my own eyes the prices increasing as much as they have. And so there's going to be a shock, in my opinion. And what does that mean? That means that Bitcoin is going to shoot higher than stock-to-flow analysis. Why wouldn't it? I mean, honestly, why would it not? Are you telling me that from here that we've reached a peak and that Bitcoin in comparison to the US dollar, that the US dollar is going to be more valuable than Bitcoin from this point out? I do not buy it, not even a little bit. And I don't buy that for any currency, for the pound, for whatever else, the euro, all of that. No, it's not happening. So, as always, stick to the fundamentals, buy Bitcoin, buy Ethereum, buy Binance. If you're willing, if you just must have the higher short-term gain potentials, sure, spread it out. But you will do just fine if you load up on Bitcoin and Ethereum and you just keep adding to that position. One other thing I'm going to say, Doge is looking very strong right now. I am impressed, and that is an unbiased observation by the levels of support that I'm seeing with Doge. It just confirms to me that, Doge is going over $1, and I think it's going to be pretty easily that's going to happen. Again, though, I do think that you can find better returns in other cryptos, not Shiba. But anyway, have a great day. Have a great week. I will most certainly be seeing you in another video. Peace.